Hello, everyone, and welcome back to another episode of Money in Motion with myself and CJ Reichel, where we break down all the markets for you, not just crypto. We take a wide look at everything going on. Today is the 25th, and it is Tuesday, turnaround Tuesday, and we're seeing that take effect in some of the crypto related equities. Definitely want to talk about that. We got Riot up about 4% to start the day. We'll see if that can be maintained. Also, we have some big earnings after hours today, CJ. We got Microsoft, Meta, Google, all after hours today. We'll see how that shakes out and what the price action looks like today. But so far, looking pretty good. And yeah, Bitcoin's holding steady. How are you doing, though, my friend?
You know, doing good. Doing good. As good as one can be. I like to see the fact that the dollar squeeze kind of continues today, and I think it's a good educational point to see a week where you actually still have DXY up and Nasdaq up, and things like the Russell up as well. So when positioning is forced, like these correlations break down, and I don't like always having those if then statements where it's like, well, if the DXY goes up, then Nasdaq must go down. Leave a little bit of news or leave a little bit of room for nuance. That's all. But yeah, a couple things I'd like to jump into today. But Monte, feel free to start it off.
Um, okay, let's start off with Bitcoin because I think that, a lot of people that are watching this are wondering what exactly is going on now that we've dipped down below 30K. So let me just pull up my screen. And here's what we're dealing with Bitcoin. Really not too much to mention, in terms of price action. If we look at this from a more interim perspective, you can see that we just kind of maintained that level during the Asian session. It got a little bit scary yesterday, obviously, as price dipped below 28,000 or 29,000. But what we had talked about in the past is how 28.5 in the long term has been the most critical level for Bitcoin in terms of volume at price. More Bitcoin is exchanged hands at 28.5 than any other level. So that makes it a highly critical level of both support and resistance. But we didn't quite make it all the way down there before turning back up. But I think what we're seeing today, Bitcoin up, 0.27%, this candle clearly coinciding with the US equity market open and the fact that it's going to be bullish. So clearly, it's like Bitcoin is moving alongside the crypto related equities. Like that's what we're seeing right now. And I think CJ made a great point before the show. We were just chatting briefly as we usually do. And he's like, the problem is there's no new money coming in. It's all the same people trading against each other. And that's definitely the feeling that I get as well when I look at these charts, because you look at the altcoins, you have essentially what is a mixed bag. Like look at today's charts or look at today's watch list. We have like half red, half green. It's a mixed bag because people are just essentially moving capital from one asset to another. That's all that we're seeing. There's no new injection of capital coming in. But we're seeing a little bit of that today with Coin, with Riot, with Mara, with Galaxy even, and even MicroStrategy, all looking pretty good today, and could potentially be the catalyst to provide that new injection of capital if they keep running. But of course, tomorrow we have FOMC, which will be a massive catalyst for price for all of these assets and major indices. So trade with caution because that is definitely a major catalyst to watch out for. I personally think that what we see in the tech stocks is today a positive day, but ultimately tomorrow, even if they beat earnings, like it doesn't matter. I think tomorrow, with FOMC being a bullish catalyst and just the fact that these assets are, pretty overextended in what has been a relatively bearish environment, I think that we see them pull back a bit. A lot of these big tech names tomorrow, either prior to like some de-risking into FOMC or post FOMC, dumping. Either way, I think that we see a bit of a pullback there. And I think, of course, that will affect Bitcoin as well. We'll see if it can, maintain that 28.5 level that I mentioned earlier. But if not, then watch out below because, like I said, that is a highly critical level. And we wouldn't have much support until 27.5, which would be a steep drop in terms of Bitcoin dominance. So that's what I'm watching as we start the day here. But CJ, would love to get your thoughts on the market and what you are seeing here today as well. Oh, you're muted.
My bad. Didn't want to interrupt or anything. Yeah, I'd like to go over some technical analysis of a few different assets, and then
What are you trading
just
right
go over
now?
one thing. I'm not trading. I was sending. I want to show them that picture of the book that I sent you yesterday. I think that's worth going over for at least 30 seconds.
Oh, definitely. Definitely.
But yeah, here I'll present real quickly. Yeah, what a move in cocoa. Just to go over this very briefly.
Yeah, wow.
Let's look at the weekly chart. Yeah, so quite a move in terms of like decade-long trends. But yeah, so some bullish price action onto the softs a little bit today. OJ continues to make closer up to new all-time highs. So just a lot of really strong price action within the commodities markets. Dollar continues to squeeze. We talked about that. I'm really liking the price action in Russell. I think I probably will get back into that today, just because we have a very nice like flip from previous resistance, I think, now to what looks like new support. So like, Monte back in the 2021 crypto days when it was very risk on. And I think the equity market is still kind of risk on, although we don't really have, maybe there's a little bit of froth. Anyways, my point is that I think this is an environment that I think you could buy breakouts, or at least I can put my stop loss at the bottom of like, basically 1964 there. So I like that. Out of all the indices we've talked about, that's been the most crowded in terms of shorts, or at least large speculators have been the least long they've been Russell in quite a while. So, I mean, it's had a pretty strong start today. I might buy that one. Coffee is still kind of a disappointment, not getting a whole lot of follow through today, down 25 basis points. We'll see. We'll see if this ends up being the local interim bottom, but maybe this is just hopeful or hopium that I'm talking about. But I mean, Monte, is this cup and handle type territory where we do this?
Yeah. Yeah, I mean, that's technical analysis. That's what a CMT would tell you to do there. That is the play. That is the extrapolation point. And maybe you are looking at it with some rose-colored glasses. That's a possibility, but I do agree. I think I see, the potential for a breakout there. And each time this thing has moved above the 20 period smooth, like there hasn't been many fake outs, right? Like each time it's moved above that level, it's actually, led to some continuation. So definitely worth watching. And yeah, I see the validity of your extrapolation there.
Cool. Yeah, I mean, these were legitimate short squeezes,
Yeah.
that's why they're just so ferocious in terms of their like uptrends. So that's what the idea is. The conditions are kind of set for, a ferocious short squeeze if it comes. But yeah, I don't know. I guess I am a little bit disappointed based on how the other softs have been performing, where you have cocoa and, orange juice making new all-time highs, and just barely starting to get this short squeeze started in coffee. So we'll see. All right, what else looks interesting today? I mean, I'm not buying this yet, but sentiment around the telecom stocks is like atrocious or abysmal. I mean, it's pretty bad, especially around AT&T. We had earnings for Verizon. They came in positive yesterday or this morning.
Yeah, and I
but
saw
still selling
Kramer was
off on
talking
that.
about AT&T as well.
Yeah, I mean, you know, Kramer's been right about plenty of stuff this year, but it's just like when you get these individual stocks where it's like, you know, Meta, the board member, the CFO lied to me. I'm crying. Or Coin. Don't even get me started on Binance. Oh, that was a famous tweet. So anytime you get those vibes and like individual stocks, I'm not buying it now. Don't get me wrong. It's very important to understand you could get run over being a contrarian when a trend is very strong and down like that. But I think it's worth adding to the watch list and just watching after we see earnings kind of unravel today.
Yeah, most definitely. Most definitely. I mean, with earnings and FOMC, I think we'll see plenty of volatility in the next couple of days here. Um, I think what's going to be most interesting, and you already kind of hinted at this and touched on it, but you know, can the dollar keep climbing, or will the dollar keep climbing after the Fed meeting? I think we see a continuation of strength in the dollar and ultimately weakness in equity markets. But it's tough to say, right? It's tough to say exactly what Jerome Powell will come out and do. As of right now, I'm kind of bullish for the rest of today, but then kind of bearish for the rest of the week. Like even after the earnings reports for those major tech stocks, I think, like I said, we see a bit of a pullback. So I'm leaning a bit bearish for the rest of the week, but bullish for today. I think today, if you're going to take some risk, today's the day to do it. But I wouldn't stay in that trade for too long because tomorrow we have a potentially massive negative catalyst being FOMC. So,
Why would that be massively negative in your mind?
well, I just think that we could plausibly see a lot of de-risking if there is a 25 percent basis point rate hike. Uh, I don't know. I think that like right now people are positioned as if like we're not going to get or like we're not going to get a hike at all. Like we've seen the dollar go up, we've seen the Nasdaq continue to go up. Um and like that's what we define as a correlation failure. So I think that people are kind of I don't know. I just think that essentially if we get that 25 basis point rate hike, I think we see stocks fall hard on the back of that, just merely because we're so overextended in so many of the big names that profit taking alone from negative rhetoric could be enough to drive the market down significantly. So, if you look at like Nvidia, if you look at Meta, you look at Microsoft, all those stocks have pumped so incredibly hard in the last 3 months. And then you look at Tesla, right? And Tesla had earnings, it beat on both top and bottom yet fell tremendously hard, has since rebounded slightly, but I think we could see something similar with a lot of the other big tech names as well. And if we have that sort of negative momentum coming into FOMC, I think that makes it even kind of worse. So, long-winded answer to a pretty simple question, but um, yeah, I think that we see risk off price action following tomorrow's FOMC meeting. Do you disagree?
Um,
I know you're not in the market of making
I,
predictions.
I yeah, I've thought about it a lot, but I just don't really. I mean, yeah, maybe we sell off on 25 bips, but like you always, you always seems like you could fade the initial move in a lot of these FOMC
Yeah,
meetings.
that's true.
Um, and even if Powell comes out and says hawkish rhetoric, like that doesn't mean the market's going to believe him necessarily. So I don't think you can say if this happens, this will happen with a high degree of certainty or conviction. And like it's remember Jeff. Jeff was like, this is one of the most traders who I respect the most, who I've had a pleasure of being able to work with over the years. But he was like, he'd be so disgusted. And it's not as much like this anymore. When you go back to the start of the year and even late 2022, when every inflation print was like critical, everybody paid attention to it and it mattered a lot. It's starting to matter less. And
That's
what
true.
this trader used to say back in the day, or he'd be like disgusted with the state of humanity and the Fed, because every market decision and every trading decision we had to make was based on FOMC and CPI. I don't think that's really the same as it was 6 months to 8 months ago. So in my view, how I look at it in terms of trading is like, whatever happens is going to happen. We'll let it pass and we'll make, good trading decisions, following based on the close, and it's kind of like what I said in Trading Rebellion yesterday, being a little bit more reactive
Yeah.
as opposed to trying to predict what's going to happen. De-risking is not necessarily predicting. That's just, covering your ass before you get into the trade, which I think is very reasonable.
Yeah, sure.
But I can't say you know,
Yeah, and I think as long as you're trading with that reactionary sort of buy, or like that's how you like to trade, rather than making predictions. You've always been that way. Like you've never been one to call the top or call the bottom. Like you know, you'll just trade what's in front of you or look at how people are positioned rather than looking at price itself. Um, I think that is definitely, as long as you have that trading style in conjunction with proper risk management. I think that's probably in my mind, like the best way to trade. And the reason why I say proper risk management is not just to the downside, right? But taking profit when you hit your upside targets as well is super important, especially if you're a reactionary trader. You don't want to get swept up in the euphoria, the FOMO. You don't want to get swept up in all that and then get stuck holding the bag as price falls back down. So you have to, if you're going to trade sort of the way we trade, where we wait for the move, we wait to see, like, wait for the fog to settle, and then you make a move. You have to be very disciplined in not only where you set your stop loss, but also where you set your take profit, because you don't want to just be, you know, you don't want to get swept up. It's very easy. It's happened to me plenty of times. You don't want to get swept up in the euphoria and believe that this asset's going to go to new all-time highs. Set a target. When the target gets hit, take profit, get out, and be happy.
I also think a thing that a lot of people feel is that they have to have a position on going into FOMC because they know there's going to likely be implied volatility.
Yeah.
But I think at the end of the day, you have to look at yourself in the mirror and say, have I made more money than I've lost on FOMC days, or have my FOMC days been net negative? And that's a very honest question I think a lot of you guys need to have prior to tomorrow's. Not to be patronizing or anything. I'm just learning. I mean, I'm
No,
speaking
I'm
from
sure it's
my
the
own
first.
experience. So
Yeah, I'm sure it's the first thing you did this morning. You stared in the mirror for a good 10 minutes, pondering whether or not you should enter a trade. But yeah, that's a good point. And I think we'll go ahead and wrap things up there. Really appreciate the comments and the viewers. You guys are the best. Ryan, Ross, thank you for the comments. We appreciate you guys very much. And if you guys would like to, or first of all, please like and subscribe. It really helps out our channel a lot. We're growing. If you haven't checked out our video with Ryan, aka the Flow Horse, highly recommend you go check that out. That'll be under the Trading Rebellion section. Lots of great. It was kind of macro based. So even if it happened like last week, it's still very relevant, I think, because he put forward some great points about kind of the macro situation that we're in. And before the FOMC meeting tomorrow, I think it may be a good video to go ahead and watch. So definitely check that out. Please like and subscribe. And also, if you haven't yet, check out tradethechain.com. You can try it for free for 14 days. Sentiment has led to a lot of good trades this week. OGN, Nick was trading that one. And we discussed it yesterday on Trading Rebellion. But if you haven't tried it out, definitely check it out. You also will get access to our Discord, which is a community of members from all around the world who share their insights, and we share our insights with them. We both in traditional equities, in crypto, in FX, in commodities. We cover it all. So definitely head over there and check that out. But that's all we got for today. CJ, I'll leave you with the final word, my friend.
yeah, thanks, Monte. Appreciate you guys tuning in, and we'll see you back here same time tomorrow. Take it easy, and